Hello, dear investors, and welcome back to Stocks Telegraph, your go-to source for insightful stock market analysis and investment strategies. Today, we have an exciting topic that's perfect for those who are looking to start their investing journey or diversify their portfolio without breaking the bank. We're diving into the world of 5 best stocks to buy under $10. Investing doesn't always require a huge capital investment, and finding quality stocks at an affordable price can be a game changer for your portfolio's growth potential. So, whether you're a beginner or an experienced investor, this video is packed with value that you won't want to miss. But before we jump into these hidden gems, make sure to hit that like button and subscribe to our channel for more valuable content. Let's get started. Let's start off our exploration of the 5 best stocks to buy under $10 with a close look at SoFi Technologies Incorporated, trading under the ticker SOFI. With a 52-week range of $4.24 to $11.70 and a market cap of $8.459 billion, SoFi Technologies is a name that's piquing our interest. In a year that has seen its fair share of ups and downs for the banking sector, SoFi Technologies has stood strong and caught the attention of growth-focused investors. What sets them apart? Their unique focus on student loan refinancing and their ambitious mission to revolutionize traditional banking. As student loan borrowers increasingly seek better rates and terms, SoFi Technologies is positioned to soar. Their leadership in the student loan refinancing space is notable, offering competitive loans at attractive rates. But there's more to SoFi's story than just student loans. They've strategically expanded beyond student lending, embracing a diverse lending portfolio that includes personal loans and a thriving digital platform. Even amidst the challenges brought by the pandemic, their Q1 revenue surged by 43%. Driven by a 37% boost in financial services deposits. SoFi's approach isn't just about student loans anymore. They've become a resilient and defensive fintech player, creating a unique blend of offerings that stand strong even during market fluctuations. This diversified model is crucial in the ever-changing finance sector, where economic shifts impact services in varying ways. Now is the time to consider SoFi Technologies as an investment opportunity. Their unique approach to redefining banking and their ability to adapt to market changes make them a compelling contender for your portfolio. Stay tuned as we continue our journey through the 5 best stocks to buy under $10. Our next hidden gem is just around the corner. Our exploration of the 5 best stocks to buy under $10 continues with a notable player in the luxury electric vehicle sector, Lucid Group Incorporated, trading under the ticker LCID. With a 52-week range of $5.46 to $19.16, this stock has garnered attention for both its potential and its recent performance. Lucid Group recently reported its second quarter results, showcasing a mixture of challenges and strategic moves. While its revenue fell short of Wall Street's expectations, there are notable developments worth considering. The luxury electric vehicle maker faced delivery challenges, resulting in lower than anticipated second quarter revenue of $150.9 million, compared to an expected $175 million. This hiccup was largely due to fewer deliveries of its Air luxury sedans than initially projected. However, Lucid Group managed to secure a significant financial boost through a recent capital raise, extending its runway into 2025. This capital infusion provides the company with increased stability and resources to navigate the evolving EV market landscape. Notably, Lucid has started shipping vehicles to Saudi Arabia as part of an agreement to provide between 50,000 and 100,000 EVs to the country over the next decade. Lucid's strategic move to address market challenges was further highlighted by its decision to lower prices on its Air luxury sedans. In a bid to stimulate demand and respond to competitive pressure, the company reduced prices by as much as $12,400, making its vehicles more accessible to a wider audience. The company's net loss for the quarter was $764.2 million, or 40 cents per share, which was an increase from the $555.3 million loss reported a year ago. Despite these financial challenges, Lucid Group's ongoing efforts to expand its market presence and adapt to changing consumer dynamics demonstrate a commitment to growth and innovation. As Lucid Group navigates the dynamic EV landscape, investors should closely monitor the company's strategic moves, market performance, and demand dynamics. With its luxury electric vehicles and expanding market reach, Lucid remains an intriguing option for investors seeking opportunities in the under $10 market. Get ready for our next stock revelation, as we uncover yet another under $10 hidden gem that holds the potential to diversify and enhance growth in your portfolio. Our exploration takes us to Novavax Incorporated, trading under the ticker NVAX, with a 52-week range of $5.61 to $44.63. This stock showcases an intriguing mix of potential and recent performance. Just recently, Novavax surprised the market by reporting a second-quarter profit and revenue that exceeded Wall Street's expectations. This news comes as the company gears up to launch a new COVID vaccine this fall, signaling a strategic move to capitalize on the ongoing demand for pandemic-related solutions. In the second quarter, Novavax posted a net income of $58 million, translating to 58 cents per share. This is a significant contrast to the same quarter last year, where the company reported a net loss of $510.5 million, or $6.53 per share. The biotech company also generated second-quarter sales of $424.4 million, up from $185.9 million in the same period a year ago. Novavax's dedication to financial fortification is evident. The company's pursuit of a stronger position in the market follows doubts raised earlier this year about its viability. The launch of its updated COVID shot, a global cost-cutting strategy, and a promising vaccine pipeline constitute Novavax's multi-pronged approach to sustainability. With an eye on innovation and a strategic positioning in the ever-evolving healthcare landscape, Novavax is a stock worth monitoring closely. Its endeavor to address pandemic-related challenges while aiming for market strength makes it a compelling contender for investors seeking opportunities in the under $10 market. Stay tuned for next stock, as we unveil another potential under $10 gem that could further enhance your portfolio's growth potential. Our exploration of the 5 best stocks to buy under $10 brings us to Dish Network Corporation, trading under the ticker DISH. With a market cap of $4.463 billion and a dynamic merger on the horizon, Dish Network is making waves in the telecommunications sector. Dish Network recently made a significant move by entering into an all-stock merger agreement with EchoStar Corporation. This strategic collaboration aims to create a nationwide wireless network, combining Dish Network's satellite technology and streaming services with EchoStar's satellite communication solutions. The merger is set to position the combined entity as a global leader in wireless connectivity. The merger terms are compelling. EchoStar stockholders will receive 2.85 shares of Dish Network Class A common stock for each share of EchoStar Class A, Class C, or Class D common stock. Similarly, 2.85 shares of Dish Network Class B common stock will be exchanged for each share of EchoStar Corporation Class B common stock. What's notable is the 12.9% premium to EchoStar stockholders, represented by this exchange ratio. This premium is based on the unaffected 30-day volume-weighted average closing stock prices of the two companies on July 5. The anticipated outcome of this merger is significant for shareholders. Existing Dish Network shareholders are projected to hold approximately 69% of the combined company's common stock, with existing EchoStar shareholders owning around 31%. Beyond strategic positioning, the merger leverages Dish Network's past investments in spectrum and wireless infrastructure, alongside EchoStar's recent launch of Jupiter 3, to potentially reduce near-term capital expenditure requirements. EchoStar's CEO expects substantial EBITDA synergies of $150 million annually from this deal. Alongside this merger excitement, Dish Network reported a second-quarter revenue of $3.91 billion, slightly exceeding the consensus estimate of $3.90 billion. The company's EPS also outperformed, reaching 31 cents compared to the expected 29 cents. As Dish Network embarks on this transformative journey and navigates a rapidly evolving telecommunications landscape, investors should keep a close watch on its strategic moves and market performance. This merger positions Dish Network as a contender in the under $10 market, holding the promise of diversification and growth for your investment portfolio. Stay tuned for our final reveal, where we'll unveil the last hidden gem under $10 that could potentially add value to your investment strategy. Our journey through the 5 best stocks to buy under $10 concludes with a fascinating contender in the real estate sector, Opendoor Technologies Incorporated, trading under the ticker OPEN. With a 52-week range of $0.9170 to $6.3850 and a market cap of $2.303 billion, Opendoor presents an intriguing investment opportunity. Opendoor made significant waves in the market, experiencing a remarkable 27.1% rise last month, an achievement that didn't go unnoticed by investors. This surge can be attributed to pivotal economic data that injected optimism into the housing sector. Investors closely follow Opendoor's share prices, given its sensitivity to interest rate expectations and broader economic indicators. Acting as a middleman in the housing market, Opendoor engages in a unique business model, purchasing homes below market value and rapidly reselling them. This approach, while promising, can also expose the company to market volatility. Opendoor's financial health is closely tied to the housing market's performance, with potential risks emerging when the market experiences downturns. Opendoor's strategic response to challenging economic conditions has garnered investor applause. The company executed cost-cutting measures to trim overhead expenses, resulting in a reduced cash burn rate. This adaptive approach, combined with optimism surrounding the housing market, contributed to the positive momentum observed in July. Crucial economic data, such as inflation rates and employment numbers, further supported Opendoor's position in the market. Cooling inflation figures indicated that the Federal Reserve's interest rate adjustments are having an impact. This is particularly significant for a company like Opendoor, as fluctuations in mortgage rates greatly influence its share price. Housing market indicators also reinforce this positive trend, with home prices continuing to climb. While sales volume and new housing starts experienced a dip in June, the overall trajectory remains promising. Furthermore, employment data, although slightly weaker than anticipated, suggests a steadying economy. This nuanced economic landscape hints at a potential slowdown, which could be seen as an opportunity. The Federal Reserve's approach to gradually adjusting interest rates aligns with market stability, a crucial factor for Opendoor's business. As we conclude our journey through the 5 best stocks to buy under $10, Opendoor Technologies Incorporated emerges as a thought-provoking investment choice. Investors should closely monitor the company's responses to economic dynamics, its financial performance, and the broader housing market trends. Opendoor represents a unique opportunity to diversify your portfolio with a company that navigates the challenges of the real estate market with adaptive strategies and a focus on growth. And that wraps up our exploration of the 5 best stocks to buy under $10. Remember, investing requires careful consideration and due diligence, so make sure to consult with financial professionals before making any investment decisions. Thank you for joining us at Stocks Telegraph. Don't forget to like and subscribe for more valuable insights into the stock market.